Do not buy a duplex. Why? Thinking small will keep you broke in multifamily investing. How are you guys doing this morning? I am doing fantastic. I'm just heading out to get some brunch with a friend and come back home, get some work done, reach out to a few of my investor fellows. I'm heading to Toronto this weekend actually, and we're gonna go on a boat cruise. I am excited to go on this boat cruise because I've never been on a boat cruise before, so should be fun. I am just out here grabbing some coffee. Actually, I already got coffee, but they did not put any cream in there, and I don't know, I can't have coffee without at least one cream. It's too bitter for me. Anyways, I wanted to come on here regardless and share some content with you guys, something that you won't hear very often, and it's that if you're serious about building generational wealth through real estate, do not buy a duplex. Purpose of this video is to ruffle a little bit of feathers, in good faith, obviously, because I just want to share knowledge with people, you know. So do not buy a duplex, and not because it's bad, but because it's small thinking. In this video, I'll break down why starting with 8+ units is not only possible, but it might be the smartest play you make. So here are the key points. Everybody pushes start small, but that advice doesn't scale. The market has changed, so should your strategy. Stay to the end. I will show you how we structure multifamily deals for real investors like yourself. So the duplex myth and why it's overhyped. People usually say start with house hacking. It's less risky, easy to manage, but what they don't tell you, duplexes have one roof, 2 tenants, minimal income spread. One tenant moves out, you're at 50% vacancy. You're the landlord, the handyman, the therapist. Here's the truth bomb. You just bought yourself a job. That's not investing, that's adulting with extra steps. So here's the case for multifamily. Let's say 8 units and above. Why multifamily makes more sense. Scalability. More units under one roof equal exponential growth. Professional property management. You can afford help, right, for property management. Asset-based lending. The bank look at your deal, not your income. Cash flow and appreciation. Rent multiplies and NOI drives value. Then there's the forced equity. You control the value, not the market, right? So let's say a duplex versus a 10 unit. Rent roll, expenses, cap rate, time required, return on time and return on equity. You can definitely see the difference there. The mindset trap. Why starting small is often fear-based. People say start small, learn the ropes. What if you learned with people who have already done it? What if you partner, ding, 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 instead of waiting 5 years to go bigger? It's a no-brainer, right? There is the fear of bigger numbers, lack of exposure to creative financing. Playing small feels safer, but it delays your freedom. Here's the quote that came to my mind. You can make safe moves, of course. It's entirely up to you, your risk tolerance, your risk appetite. But here's the thing. You can make safe moves and still stay stuck. It's the reality for a lot of people. So now, no sugarcoating, just real talk. What it takes to start bigger, the real blueprint. It's strategy, not struggle. Partnership, vendor take-back financing, raising capital legally. Have to, stay compliant out here in these streets. Have proper asset management systems. Real talk, you don't need to know everything. You need to know how to bring value. The world rewards value, right? Not general information, value. And align with a strong operator or team. So let's say it's a 10 unit breakdown. You break down what it costs, raise the capital, structure it in a way that you want to structure it, look at the cash flow, look at the market and see the appreciation projection and also your exit. Now, what to do instead of buying a duplex? So let's say you come across that 10 unit deal. Break it down. What's the cost? How can you finance it? How would you raise the capital or the fund? Ask yourself, how do you do that? How do you want to structure it? The cash flow, the appreciation projections, and also your exit strategy. Before you buy the deal, you also want to know who you're going to sell it to. Regardless if you're going to keep it for 10, 20, 30 years, you want to know. That's your exit strategy right there. Okay, I'm going to keep it for 10 years, 20 years, but who's going to be your buyer? You have to have that in mind. So what to do instead of buying a duplex? If I were just starting today, I would align myself and build relationships with active operators like myself, study underwriting, but don't get into analysis paralysis. Trust me, you're just gonna there analyze it and you'll just like be stuck. Oh, what did this happen? What, like, you're just paralyzed just by the numbers. You don't want to get into that. You don't want to do that. Because then deals pass you by, right? Learn to raise capital legally and ethically. Look for 8+ units opportunities with creative financing. Join partnerships to scale faster and safer. And again, compliant with the SEC rules and regulations. So you want to check those rules and regulations. And also, I'll just put that plug in right now that you want to consult with a securities lawyer to make sure that when you're raising those capital, you're raising it legally and ethically. And those partnerships are deemed compliant. You want to make sure that everything you do is above board and is compliant. Okay. What we do here, like the purpose of this video is to inform you and for you to learn more. It's not a solicitation or anything. So you don't need a duplex. You need the right deal, the right team, and the right mindset. Heavy on the team though. If this video made you question the duplex strategy, good, I did my job. That means you're starting to think like an investor and not a landlord. If you're ready to talk about how to scale smart, safely, and with people who know the game, reach out to me, book a call. I am going to insert my contact information and my social media handles all right. Actually, I think I'm gonna do it right here. More space here. Yeah, I'm gonna have my social media handles all right here. Reach out to me, let's connect, let's talk about like what you're looking to do in the multifamily space, how you can learn more as well. Reach out to me, let me know how I can help you out, and let's just connect and continue to learn and grow. Stop thinking 2 doors, start thinking 20. Subscribe, like, and share this with someone you think is stuck in that duplex mindset. Cheers. I am heading on out now to my brunch, and I'll see you guys in the next one. Thank you so much for watching this video. Don't forget to like, share, and subscribe. It helps others who would find this video valuable and information as well for them just to digest. So if you know someone who's interested and want to get into the multifamily space, send them this video, share the video with them, and let's just grow and learn from each other. The world is a big enough place for us to win. My success does not diminish yours. Take care and see you next time.